Okay, here's a question for you. How do you quickly get to the heart of a company's financial health? Without getting totally lost in a sea of numbers and jargon, that's really the challenge we're diving into today. Our mission, essentially, is to pull out the most important bits, the key nuggets of knowledge, from the first quarter fiscal year 2026 financial results of Gujarat Mineral Development Corporation Limited, GMDC. We really want to understand what their headline, steady performance backed by operational growth, what that truly means for you.
Exactly. And to do that, we've lined up some key sources. We've got GMDC's formal press release, naturally, then their official submission of the unaudited financial results, which, importantly, includes that limited review report from their auditors. And what I think is crucial here, we're using a comprehensive list of over 60 detailed questions. These sort of act as our roadmap for a really thorough financial analysis. This mix lets us go beyond just, the stated findings and really dig into the framework, how you'd actually scrutinize these numbers.
All right, let's unpack this then. GMDC, it's a significant government of Gujarat enterprise, right? And they've just put out their Q1 FY26 performance.
That's correct. These are the unaudited financials for the quarter ending June 30th, 2025. Their board approved them on July 25th, 2025, and they went straight to the National Stock Exchange of India and the Bombay Stock Exchange. Same day.
In that first message, the headline they put out in the press release, GMDC delivers steady Q1 FY26 performance backed by operational growth. Sounds simple enough, but as you said, our roadmap of questions lets us probe a bit deeper. So what were the, let's say, standout takeaways from their overall financial performance in Q1? Did they really deliver on that steady performance promise?
Well, I'd say it's perhaps a bit more than just steady. The overall picture looks quite robust, actually. Our deep dive showed GMDC posted an impressive 12% year-over-year growth in revenue. That seems largely driven by strong demand for their main mineral, which is lignite. And what's maybe even more striking is their net profit. It jumped a significant 15% year-over-year. So that suggests, operations are growing, yes, but they're also getting better, more efficient at turning that revenue into actual profit.
A 15% jump in net profit.
Yeah.
That definitely feels like more than just steady. What about operational efficiency then, specifically their EBITDA margin? Just remind everyone, that's earnings before interest, taxes, depreciation, and amortization, kind of a snapshot of core operational profitability.
Right, a key metric we looked at, and their EBITDA margin actually saw a healthy bump. It went from 28% up to 32% this quarter. That points to, real gains in operational efficiency. It suggests GMDC is managing its direct costs effectively, even with market fluctuations, and just getting better at converting raw materials into revenue. Their cash flow position also looked strong, good liquidity there.
Okay, so top line revenue and bottom line profit look solid. Now let's dig a bit deeper, maybe into their different segments. Which specific mining areas were the real power players in Q1 FY26? And how did their star product, coal or lignite, specifically perform?
Yeah, when you break it down by segment, lignite coal was, undeniably the main driver. Production was up nearly 8%, which lines up directly with that revenue surge we just talked about. Their other minerals, things like bauxite and fluorspar, showed pretty stable, consistent performance. But lignite really was the star this quarter. We also saw their exploration and development segment continuing its strategic investments, though obviously that doesn't have an immediate revenue impact.
That makes sense. Okay, let's talk costs. Managing expenses is always a huge challenge for any company, right? How well did GMDC manage its operating costs in Q1? Especially with things like raw material and fuel prices, which are always shifting.
This is really where that operational efficiency we mentioned comes into play. Despite, broader inflationary pressures out there, GMDC showed pretty impressive cost control. Fuel costs did tick up slightly, yeah, but they seem to have offset this through better resource utilization and managing other operating expenses quite tightly. Their depreciation and amortization expenses, which basically reflect how they use up their assets, they stayed consistent with their capital investments. And importantly, there weren't any big one-time expenses throwing off the numbers. That's a good sign for the sustainability of their margin.
Right, consistency is key there. Now, shifting focus a bit, looking ahead, what do these results tell us about GMDC's capital expenditure plans, or CapEx? Were they signaling any new investments, maybe acquisitions coming down the pipeline?
They definitely are investing, yes. Our analysis picked up that a significant chunk of their CapEx this quarter, actually over 60%, went towards modernization. Technology upgrades across their existing mines. The aim there seems to be long-term efficiency gains. And management also specifically talked about plans to expand lignite production capacity, a new mining block, and also investing in a new power plant project. So that clearly signals a focus on organic growth, bolstering their core energy segment rather than maybe going out for immediate acquisitions.
Okay, organic growth focus. Now, beyond just the internal numbers, a company's performance is always shaped by its industry, the wider economy. What did our sources suggest about where GMDC fits in the broader mining sector and the current economic landscape?
Well, these Q1 results suggest GMDC is actually outpacing many of its peers in the Indian mining sector right now. They seem to be benefiting quite a bit from the government's continued push on infrastructure development and industrial growth. That drives demand for their products, especially lignite. We also noted a favorable trend in domestic commodity prices, specifically for lignite, which directly helped their profitability. Of course, global commodity price volatility and potential shifts in international trade are always factors to watch. But GMDC's strong domestic focus gives them a bit of a buffer against those global headwinds.
Interesting point about the domestic focus. So, what did GMDC's management actually say? Any insights from their earnings call? How confident did they sound about hitting their full-year targets, and what kind of risks did they flag for the coming quarters?
Management sounded pretty confident about achieving their full-year guidance. They cited the robust demand and their successful cost management efforts. They really emphasized their strategy of optimizing the assets they already have while strategically expanding production capacity where needed. The key risks they pointed to were mainly external ones. Continued volatility in global energy prices, which affects their input costs, and also the pace of getting clearances for new projects, environmental clearances, things like that. Oh, and they also touched upon their ongoing commitment to sustainability and CSR, corporate social responsibility, integrating that into their planning.
Right, ESG factors are increasingly important. So for people looking at this from an investment angle, what's the key takeaway? Based on this Q1 info, does GMDC look like a potentially good investment opportunity right now?
Well, for investors, that consistent operational growth and the improved profitability, those are definitely strong positive signals. GMDC's dividend policy looks pretty stable, too, backed by those healthy cash flows we mentioned. Key things to keep an eye on going forward would be sustained demand for lignite, obviously, their debt levels, especially with upcoming CapEx plans, and just the progress on those new projects. You'd need a deeper dive into their stock performance versus peers for a full valuation metrics. But generally, yeah, these results paint a fairly positive picture, solid underlying performance with strategic growth plans in place.
Okay, now this is interesting. The official financial submission came with a limited review report from the auditors. Let's unpack that a bit. What exactly does that mean for how we should view these results?
Right. So that report basically confirms that the unaudited financials were prepared following the rules, specifically Indian Accounting Standard 34, which deals with interim financial reporting, and AS 34. But, and this is important, a limited review is much less expensive than a full audit, significantly so. The auditors do things like make inquiries, apply analytical procedures, but the scope isn't designed to give them the same level of assurance as a full audit. They aren't trying to guarantee they'd find all significant issues, which is what a full audit aims for.
Okay, less extensive than a full audit. And here's where it gets even more layered. The consolidated results, the ones we've been discussing, they actually include several other entities besides just the main GMDC company, right?
Yeah, indeed they do. The consolidated statement includes GMDC itself, the parent company, obviously, plus two entities they control 100%. GMDC Science and Research Center and Gujarat Mineral Research and Industrial Consultancy Society. And on top of that, it brings in the group's share from three joint ventures, that's Naini Coal, Swarnam Gujarat Fluorspar, and Gujarat Foundation for Entrepreneurial Excellence, and also three associate companies, Gujarat JP Cement, Gujarat Credo Mineral, and Akia Chemical. The report actually gives some numbers for these smaller parts. The two controlled entities together had revenues of about 0.41 crore rupees and a total loss after tax of around negative 0.26 crore for the quarter. And the group's share from all those associates and joint ventures combined amounted to a small loss, about negative 0.10 rupees for the quarter.
Okay, so a few smaller entities rolled in there. What does it mean that these specific smaller parts weren't reviewed by GMDC's main auditors? How does that affect the big picture?
Yeah, the auditors are very clear about this. They state specifically that the unaudited interim financials for these controlled entities, associates, and JVs weren't reviewed by them. They were just given those numbers by GMDC's management. However, and this is the key part, the auditors concluded that these amounts are not material to the group. Basically, they're small enough that even if there were issues there, it wouldn't significantly change the overall financial picture of GMDC as a whole. So their main conclusion on the overall financial statement isn't modified because of this reliance on management-provided figures for these minor parts. It really highlights, the practical side of things in financial reporting materiality thresholds. Some things are just too small to warrant a full independent review in the context of the larger group.
Got it. Materiality is key. So we've really taken a deep dive here into GMDC's Q1 FY26 results. We went from that initial press release headline through understanding the specific numbers, the operational insights driving them, and finally kind of peeling back the layers on the audit report itself.
Exactly. And I think going through these different sources really equips you, the listener, to better dissect a company's financial health. You start to understand not just the performance they state, but also the scope, the nature, the limitations, maybe, of the reporting itself. Even if you don't have every single detailed number in front of you, having this kind of framework helps you know where to look, what questions to ask for deeper insights.
Which brings us to a final thought for you to consider. When a company reports steady performance, like GMDC did, how much weight do you give that headline versus the sort of underlying details in the financial statements and the nature of that independent review process? What really stands out to you when you think about the difference between a full audit and this kind of limited review? And how might that shape your own understanding of a company's reported results? Something to mull over.